What's up, guys? In this video, we're going to go over my favorite day trading setup that has made me an insane amount of money, close to $130,000 so far this year. As you can tell, here are my results on a day-to-day basis. Now, to use this tool, you're going to need a couple of things. You need a charting software, obviously a broker or a prop firm, and then the footprint charts, right? Footprint charts are this right here. If you don't know what footprint charts are, how to get them or how to use them, I'll actually tell you at the end of this video how you can get these for free, so you can use these for free how I use them. Now let's get right into the video. So the first thing you're gonna have to do, right, for this setup to work is identify the bias longer time frame. So what I do is I go into the 4-hour chart and identify this bias, right? What is the bias or the sentiment, the trend we currently have? Not only do we see price in a pretty strict trend to the downside, so sentiment is very, very bearish. We also see volume pick up as we're selling off, right, from a pretty dead volume. So that's number one. This is just telling me that I want to go short. A higher probability setup will be going short and following the overall market sentiment. Now, the next thing that I want to do is, after I identify the 4-hour trend, is that now I want to look for a 30-minute inverse trend. Meaning, if I want to go short, right, I want to see the 30-minute have an upwards trend, and I want to inverse that trend into the 4-hour, which is a downtrend. So for me to actually be able to do this and for it to be able to work, you need to know about supply and demand zones. Now, these are the key levels where we'll look to actually place a trade. Now let's go over these zones really fast and how to draw them and how you can use them, so this makes a little bit more sense to you. If you already know what these zones are, how to draw them, how to use them, you can skip forward a little bit because you probably have already heard this before. But supply and demand, we're gonna go over how to draw them, how to use them, and this is just basically zones which smart money has shown interest, because these are the zones the order is getting filled right before a significant move up or down. Now, the time frame I draw these on are the 4-hour, 2-hour, 1 hour, and 30 minutes, and sometimes I'll go down to the 15-minute and draw these zones. So what I really want to do is wait for a big move down or a big move up. Now, right now, let's just talking about supply. So I'll wait for a big move down, right? Then I'll identify the consolidation before that for my zone. So what a big move actually means is like one massive big body candle with small wicks, or 2 to 3 big/medium candles with big bodies and small wicks. Small wicks is very, very important on the time frames. Now, supply, we're going to start on the 4-hour time frame, identify a big move down, right? Identify consolidation, equal highs basically, or a neutral candle like this before the big move down, right? Now, the bottom of the zone is going to be the bottom of the consolidation body, or the bottom of the candle body, and the top is going to be the top wick of the consolidation, or the top wick of the neutral candle. So it's very, very simple, right? Quick little test. We have this right here. Where's our supply, right? Bottom body, top wick. Another supply right here, bottom body, top wick, consolidation, and a neutral candle. So you have both examples. Now, demand is going to be the same thing, but just the other side, right? It's going to be on the 4-hour, we're going to start off again. The top of demand is going to be the top body, and the bottom of demand is going to be the bottom wick, right? You can't see this one right here. There is a bottom wick. Now, where do we see demand, right? Where's demand? Bam, right here. Top body, bottom wick. Perfect example. So the 15-minute zone, sometimes you'll get, a look where the 30-minute chart just shoots straight down and you won't know exactly the zone in between, or you won't know if anything is playable. So in this instance, you'll zoom into the 15-minute time frame, and then you might actually start to see some zones being formed in the 15-minute. Very rarely will I do that. Now that we know about our levels and we know the trends, right, now we have to kind of wait and see what we want to do. So we know the longer time frame on the 4-hour is bearish, right? So we want to go for shorts and shorts only, right? So that means we need to go ahead and find a 30-minute bull trend, right? An uptrend into supply. And this is what we need to find first. So whenever we get this down, we can go ahead and check out our first box. So going into the market, right? We need to go ahead and plot all our supply levels, because again, we're going for a short. All our supply levels because we're going for a short. Now, there's many other supply levels. We're just going to use these two for the sake of this video. So now all you want to do in the 30-minute is just find an uptrend into supply. Uptrend into supply, uptrend into supply. And you want to just do that, cherry pick it. Make sure it looks really good and actually hit supply. This one right here did not hit supply, so we're not going to use that one. Now, the next thing you want to do is actually use volume by price, right? You want to see volume die out as it's approaching or as it's inside supply, because you want to see less interest in these transactions. You want to see less people participating at these higher prices, aka supply, to send the market falling down even further. So that's step number 2, right? Again, we need to have the 4-hour bearish on their side, 30-minute, reverse trend into supply. Now we need to check volume by price. Now, volume by price has to be decreasing, right? It has to be decreasing in supply for us to take the trade. If it's increasing in supply, it's probably going to be a break, and we do not want to take the trade. Now, once you have these few things identified, we then want to hop into the footprint chart, right? We want to look at our footprint chart, and I'll show you exactly what we want to do with these footprint charts. So these footprint charts will automatically plot these sell side imbalances for me, right? So what I want to do is not try to guess when the market's going to fall off supply. So I want to wait for the market to sell off supply aggressively and form these sell side imbalances, right? Now, once that happens, all I want to do is wait for price to come back in the sell side imbalance, tap it and close beneath it and not get filled, right? Tap, close beneath, not get filled, we're in, right? This one comes up here, taps it, fills the imbalance, fills it and actually closes above it. So we don't want to get into that. We want to take this only when the candle closes below the imbalance and does not fill it, right? Right here, it taps it, closes below, you're in, right? Right here, taps it, closes below, you're in, right? Taps it, closes below, you're in. In this example, right, sometimes a close will be too much risk. So what do? You don't take that setup. You wait for the next one, right? Right here, tapped it, closed above, filled it, you don't take it, right? Tapped it, closed. This was a perfect right here, right? Perfect one. Tapped it, closed below, you're in, stop loss right above here, take profit right down here, and you're good to go. So it's that simple, guys. It is that easy, right? You're not trying to guess. You're not trying to play guessing game. You're trying to be patient, disciplined, and wait, right? Remember, you want to wait because the 4-hour sentiment is bearish. You want to wait for an uptrend of the 30-minute chart into supply. You want to see volume die off. Once it's in supply or on the way to supply, you want to wait for that sell-off to happen. And once you wait for that sell-off to happen, you want to wait for any sell-side imbalances to be formed. Now, when it's formed, all you have to do is wait for price to come back up, tap that sell-side imbalance, right? Tap the imbalance, close back beneath it. Whenever it closes, you're in. Stop loss above the high of the candle, take profit the next market structure shift or like liquidity level, and you're good to go, guys. Now, here's a little free gift for you. If you go down below in the description, there'll be a free course on basically everything I just talked about here in much more depth, how to get started as a trader for complete beginners all the way to advanced experts trying to actually become profitable or even scale up if you're already profitable. So if you'll go to the description and check it out, it'll be right down there. Hopefully this made sense to you guys. It was a quick video. It's a very, very simple and easy setup to use. If you want to learn more about it, just check out the rest of my channel or the free course down below, and I'll see you on the next video.